problem with crypto is that it does too much for people to understand in just one sentence what it's capable of. There are still a lot of people out there that will say, oh, is it a Bitcoin? And then I'm like, no, I'm talking about a completely different blockchain, and they don't know the difference. Or sometimes people go like, hey, it's okay. Like there's a lot of people out there in the traditional finance world that think about it in this way. And on the other side, you have some people from institutions that say, I believe in blockchain, but not in crypto. I'll go back to my analogy of like the internet brought people online. Blockchains are bringing people on chain. What that means is that with the internet in the Web2 world, what we had was like data that we could share easily across the world. And the same way you and I are having this conversation. We're not in the same room, we're not in the same country, wherever we are, but the data is flowing and we're able to have this conversation. Now, in a crypto world, all the assets live on chain. But the main point of a blockchain is transfer of value via a token of some kind. So if you remove the value transfer and you only have a blockchain, which is a database, I have created a very over-engineered Excel sheet. So trying to communicate, like, you need to have composability and you need to have transfer of value and you need to have users that can access it from around the world.
Hi there, welcome to the new episode of Voice of Web3 podcast powered by CoinGate, where we speak with the heavyweights and innovators of the Web3 industry. I'm Yali, the host, and today's guest is someone you will not want to miss. Jayant, co-founder of Banter. They are building one of the first RWA layer 1 built on Cosmos ecosystem. Jayant is well-known builder in the DeFi and Web3 space with a background in blockchain and digital assets. Nice to meet you, Jayant. What's up? How's it going?
Oh, thanks so much for having me. And lots going on. So I guess there's a lot to jump into right away. And feel free to call me Jay. It's just a lot easier than Jayant. I mean, in crypto, nobody has time for a second syllable. So Jay is easier.
Right?
Yeah.
Awesome.
But yeah, that's great to be here. Thanks so much for having me. And yeah, like you said, building the RWA future and looking to figure out how we bring the future of finance on chain as well. So happy to jump into it and see where this conversation goes.
Before we get started to discuss all things, I want to do a kind reminder for those who watching this podcast and still haven't subscribed. Please do it right now because we have a really cool guest, and these guests always motivate, share their insights, and explain a lot of hard things. So please, we appreciate your likes and subscribes and activities below the video. I want us to discuss today the market statement, of course, Banter's role in the industry, your ambitions goal maybe, and of course, tokenization.
Mm-hmm.
But to start with, I think that it's really good point to let our audience know how you came to the industry, what's your background, and why blockchain and crypto. It's really interesting.
Yeah, absolutely. And happy to share that as well. So compared to most other founders in the crypto space, I've had a slightly non-conventional route into the blockchain industry, primarily because I have two phases in my work life. The first phase is before crypto, and the second phase is after crypto. In my life before crypto, I spent a lot of time. I'm from India, so I spent a lot of time in India, growing up all around the place. And the first job I ever had outside was at a microfinance company in rural India. So think of it this way, that I was selling financial inclusion and my clients were farmers and the agrarian population of the nation. So that was my first entry into understanding mass market retail as far as like a financial product is concerned. And one of the things that really stood out to me, and I realized that it's not necessarily the best place to be, is that even to facilitate a $100 loan in this like regulated industry for people from the lower economic strata, it costs about $40 to facilitate that in operational expenses. So if you're paying 40% interest on a $100 loan and you're not necessarily from a wealthy background, that's oppressive in terms of like a drain on your wealth. So follow that up with a stint in S&P Global, working in credit risk with banks in the Middle East. That was my entry into understanding how finance in general functions at the corporate level. So it's the one end of mass market retail, the other end is corporate finance and credit risk, which is about as fun as it sounds, which is not very much. Cut to that, follow that up with moving into my own startup phase, because that's when I realized that it's best to enter the crypto blockchain ecosystem, because in my first startup, I was looking at data authenticity and making sure that things were done accurately. And there was like all the payments were done online. But this is in 2016 in India, which was not necessarily the most conducive place for innovation or even for blockchain development, because very few people were talking about it. Which is what brought me to Hong Kong, which is where I live right now as well. Primed first with a crypto custodian, which is based out here. So I understand the requirements in the institutional side as far as crypto custody is required. And then with DeFi, like I met my co-founder in the summer of DeFi in 2020, and we've been building Mantra for the last 5 years. Gone through the process of trying to be idealistic and create a completely decentralized environment, following all the fun stuff that happened in 2022 with Luna and FTX. One of the things that came out was that people don't have a problem with KYC, they just have a problem with the opacity of the financial system. So that's why we started building around the fact that there are all of these assets that are being tokenized, and we've been looking at it in some form or the other in both of our careers as far as founders are concerned, and working towards making that reality. And that's when we realized that one of the things that's missing is the ability to bring tokenized assets and real world assets in the way that they exist, and have real world assets have real world compliance that can be enforced on chain, or at least verified on chain until we get to that enforcement. So that's where the Venn diagram of people that believe in crypto and the people that believe that compliance is the way forward and the evolution of finance, that's where we started building in about 2023. And then we've been the first RWA chain to launch, and bringing all of this real estate assets and all of these money market funds and tokenizing them and giving them access to the crypto retail audience that otherwise wouldn't have had access to some of these products out there.
Yeah, thank you. I see you have like very strong background in finance also. It's great. Yeah, recently I've been chatting a lot with Layer 1 and Layer 2 projects, and when I asked them about most exciting things like developments or trends in the industry, a common thing emerged, RWA tokenization. And I think it's really cool that you are in this direction. So why it matters, and Mantra's essential role in this? I mean, RWA tokenization.
So I think it matters because, like, when smart contracts became a thing in the industry, and it said that all of these heavy operational processes that are like expensive and take a lot of people in the real world, once you can automate a lot of that and bring trust from there on chain as well, it opens up a new way of looking at it. So think of it this way: if the internet did for your data and brought it online, then a blockchain does for your value and brings it on chain. So the idea is that now that you have the ability to take value and represent it on chain in a digital format, you open up the environment to be able to do a lot more innovative things with these assets. So let's take like a bulky, illiquid industry like real estate, because everybody understands it. It's been around for 3,000 years. Everyone's been using it in the same way. But then now imagine that if you have the ability to access liquidity more easily, or if you have the ability to fractionalize it and sell parts of it, you've created a new user base, because $1 million apartment, there's very few people that would be able to afford it. But $100 fraction of $1 million apartment, suddenly you've got a new user base that can be able to afford that. And by bringing all of this logic on chain, you're not necessarily adding to the operational costs and from a business perspective, but you're also creating like the scalability effect. Because whether you're building a smart contract for one user or 100 million users, the logic is the same. And if the blockchain is able to deal with that kind of load in terms of transactions, throughput and processing, then you're able to get that across. So I think RWAs is like the realization of the promise of blockchain, which is decentralized trust, accessibility from around the world, being able to get into an industry that otherwise you wouldn't have been able to. And to be honest, like most people in like the developed world don't necessarily think that real world asset tokenization is like this big, huge step, because you're tokenizing treasury, you're tokenizing some of these other things out there. But the thing is that if you're from any other part of the world other than the developing world, you would never have been able to access these products. So the question is that now with the new user base that you have available, does that change the nature in which that these real world assets are being tokenized and the new kinds of things that are happening? Or
Mhm.
does it mean that you just have a larger user base doing the exact same things? So these are some of the fun questions that we're like asking and finding answers to as we're building this tokenization suite on Mantra. Because part of it is how do we bring the inventory to tokenize, like let's say all of these other things from an institutional perspective. And then the other aspect of crypto is like you have like the retail element of it, and
Yeah.
everybody can be their own bank. So we're bringing high quality assets, we're bringing in our community of users and long-term supporters, and then we're giving them a ground of which that they could be.
Yeah, and we will discuss it in details because it's like it's very hot topic and it's really perspective directions of the industry. But you told you like told a lot about your previous experience, and it's really interesting to know your how you feel the industry. I will explain you. When we see that regulation is coming, we see how every day more and more people are getting involved. Crypto adoption is happening. It's really interesting to step out of the specifics and hear your helicopter view. How do you see the global crypto and blockchain industry? In your opinion, what problems it solves for society? I mean, it primarily, for example, a tool for investment, a transformation of the financial system, or it's a driver for digitalization. How you feel this industry for people?
Oh, I think it does all of the above. The problem with crypto is that it does too much for people to understand in just one sentence what it's capable of. So if I were to like zoom out completely, I think I'll go back to my analogy of like the internet brought people online, blockchains are bringing people on chain. What that means is that with the internet in the Web2 world, what we had was like data that we could share easily across the world. And the same way you and I are having this conversation. We're not in the same room, we're not in the same country, wherever we are, but the data is flowing and we're able to have this conversation. Similarly, blockchains allow, and crypto in general, allows you and I to be able to do financial transactions without actually having to know too many details about you, other than the fact that you're able to meet your end of this deal that we've conducted through a smart contract. So I just feel like it is it's creating a global market for value to be transferred from one end to the other without all of the expensive legacy infrastructure of banking that would otherwise prevent like smaller retail value to be transferred immediately from one end to the other. And retail value could be in terms of dollars, it could be in terms of IP rights, it could be in terms of information that you're sending out. But it's just reimagining of value is what's happening in the crypto industry. And if I were to look at it right now, it's just a lot more people are getting comfortable with the fact that the old way of doing things is wrong. Wrong in the sense that it's expensive, it's kind of difficult, it's not scalable. Like if I want to do something at a bank, I need like 10,000 people. If I figure out the logic of that, I can have one money market like Aave and then be doing like multiple $1 billion in like collateralized loans. So the thing is, what would have taken like centuries to do in the legacy finance world, you can do it within like a short period of time in crypto. So I think like it's just this new future that we're looking at, and it's a reimagining of how distributed ledgers work and trustless systems work. The problem with people understanding this is I think they are still of the belief, and this is from the people in my circles that are non-crypto, the types of people that ask me, is Bitcoin still a thing? To them, they don't actually care about the fact that there is a bank that you have to KYC with and that you have to hold on to the information and you go through the process, because they can trust the bank. Similarly, a lot of people that we're trying to onboard in crypto, all of the people that believe that you should be your own bank and then like financial independence and like having access to your key, all of the people that believe in that are already here. So if we're trying to like build just for them, we're limiting ourselves from creating new products for this entire user base of like a few other billion people that want to come on board, but maybe are not as they're more a little conservative as far as their risk profile is concerned. So the idea is like they don't want to be their own bank. They want to have some trust in the system that somebody else can take control of. So that is where I feel like there's a user gap that needs to be bridged. Meaning, like everyone says that we're building for the next billion users. My question is, how are you enabling them to feel comfortable in this? Because I'll be honest, the user experience is not the best in crypto. That's not the
Yeah.
reason why a lot of us are here. Nor is it simple for us to explain to someone that doesn't know what a seed phrase is. And it's intimidating for people to onboard. So I think that there is an onboarding problem, there is an awareness problem that exists. But when you have governments and regulators around the world taking a more serious look at it, that gives these people who would otherwise be afraid of coming on chain a little bit more peace of mind, saying, okay, my government thinks this is a good idea. It can't be all bad. So that's where I think we're at as an industry.
Yeah, thank you. It's really interesting. And I wouldn't feel right if we didn't talk about what's happening with the market right now, because just 2-3 days ago, cryptocurrency market experienced a significant event that has led to widespread speculation about the state of the bull market that triggered ongoing panic selling. I mean, after crypto White House and other things like crypto fell bad. And just short question, is the crypto bull market over, or how you see this 2025 year for crypto?
I don't think the bull market is over. I don't want to say that we're in a bull market as such as well, because I can't tell. Like in previous cycles, I could tell we're in a bull market when we hit Bitcoin all-time high, and then like everyone is excited and it's growing and there's all that euphoria for a little while, and then a bubble bursts and then we're back down. This time it seems a little bit different in that we've already hit a new all-time high with Bitcoin. We have like governments around the world that are looking at it. But I almost feel like we've matured as an industry to the extent that the high highs and the low lows of the past have been replaced by lower highs and lower lows at this point in time. So maybe it's just a little bit of a market correction that's happening, or I could say that all of the events of like the White House, etc., have already been priced in, and there's people taking profits. But I think more or less, it's like it's a cleaning out of leverage that's happened across the markets that I don't really know exactly why, but it tends to happen repeatedly. In 2025, though, I feel it's a pivotal year in crypto because one of two things can happen. Governments can figure out how to allow innovation in crypto within the bounds of either existing or new regulation, or governments can decide that I don't have enough control, I don't want this to happen, and I want to shut it all down. So we've seen how it's worked in the US in the past 10 years almost, as far as like crypto regulations concerned, and it's been adversarial to say the least. So even if a government says that I don't want crypto within my borders, it just means innovation goes somewhere else. So I think 2025 is the year where either innovation meets with acceptance from a regulator, or innovation finds a new home to innovate in. But I think it's a critical year from a builder's perspective, and I consider myself a builder, where either I get to continue doing what I'm doing, and then I get to partner up with governments and then do that with them at scale, or I need to find new reasons to convince the governments that they should let me keep doing what I'm doing.
Yeah, feel the same. Let's get back to RWA market expansion. So can tokenized RWA be the industry's next big trend for the masses? While it's currently under radar, as I feel, it hasn't yet gained the attention it could potentially attract. So can be it the next trend?
I think it already is the trend that everyone is tracking. So it's not necessarily about the next trend, but it's about how long can this trend continue, the way I see it. Because from my perspective, we've been building for the RWA future since 2020. It's just like come up in the form that it exists right now over the past 2.5-3 years or so. I think that the one thing that is possible and for RWAs in general to be a theme for the next decade, and not just like a trend or a narrative that we're thinking about, is that as more and more businesses realize that there is optimization of so many different things by bringing their business on chain, and then that leads to like lower costs and higher output, etc. So there's a business case from just a balance sheet perspective that businesses now are taking into account and being serious, and then bringing that on chain. But I think on the not so easy side of this being like a continuous thing for the next decade is that when you have real world assets, then you need some kind of a real world compliance as well, right? Like I'll give you an example. Let's say, for example, that we have some property that we've tokenized somewhere. Let's say Dubai. Okay. So in Dubai, we tokenize some property and then we put it into a money market where it's similar to Aave, where I keep saying Aave because I'm a fan. I use it quite often. And I would love to do that on chain. But if we have tokenized real estate, and then I just have it as a token representation and I borrow USDC against it the same way as I would on Aave, what happens if if the price of the underlying real estate asset drops and then my position gets liquidated? Now, in a crypto world, all the assets live on chain. So if my ETH or Bitcoin or USDC get liquidated, then that just means whoever liquidated me has access to those tokens. But then when you have real world assets that you're using in this particular use case, now, even if I were to tokenize it and get like control of that asset for in whatever way, there's still a real house somewhere that exists that also needs to have like a real world check that is in place, that there is this wallet address that has now been liquidated, it's now moved to this new wallet address. And then because it's like land and real estate, everyone wants to make sure that there's no sanctioned people, that there's no KYC breaches that are taking place, because these are things that are governed in a particular way, and we need to like adhere to those governance requirements and not just say that we're going to overthrow the old system and do it in a new way, because that's a short way of alienating everyone in the traditional way of doing things. So I think the RWA future depends on how well we can work with existing players across all industries and how well we can take them along for this journey. Because if we try to become the RWA tokenization entity for every single type of tokenization, because everything can be tokenized, not everything should. But if we do that, then it's unlikely that we're going to succeed, because there's an entire industry that's probably going to be against us, saying that you're taking away my livelihood, so you need to stop doing that. As opposed to if we partner up with them and then we show them that this blockchain is an evolution of the next phase of finance and not a revolution where they're going to be like losing their jobs and things like that, right? That's the best way that we need to grow as an industry and integrate with existing setups and try to make them better and more accessible, rather than trying to overthrow the entire way that things are done right now.
Yeah, you read my thoughts, because the next question I want to ask you, it's about announcement that Mantra did 2 or 3 months ago, that you tokenized $1 billion of real world assets for UAE-based property firm, Damak. The first, I want to clarify why Dubai. Of course, it's obvious because it's very popular in Dubai, but why Dubai jurisdiction? Why not Singapore, for example?
Okay. So Dubai is popular. More recently, we've been working on Dubai for quite some time as a geography. One of the reasons Dubai and the UAE in general is that there has been a very progressive view on DeFi-based licensing platforms and chain and doing things on chain. So one of the examples is that we, in addition to the Damak property deal, where we are tokenizing all of those assets, the other element is that we have also got our VARA license. VARA is the Dubai Regulatory Authority, which allows us to be a provider of financial services in a regulated manner. And why Dubai to do this over Singapore? As a jurisdiction, Dubai takes a more progressive stance in terms of like innovation and a regulator that is responsive to emails and gives guidance as to how it happens, and an understanding and a curiosity of what's going on. Singapore has that as well, but it is a slightly more it's taking a different approach towards it, wherein they're looking at MAS has this amazing sandbox, as do a few other jurisdictions. Within that sandbox, there is immense innovation that is taking place, but it doesn't necessarily always make its way out of the sandbox and into like the mass market. Whereas in Dubai, the avenue with the regulators taking a close view with it, and they look at innovative partners as like their partners to be able to make things happen and make the Middle East a financial center. So progressive regulation, progressive governments around acceptance of technology, and the ability to explain innovation to an otherwise regulators are not necessarily the most risk-oriented people out there. But when you are able to explain an innovative idea to regulators in Dubai, they will say, hold on, and ask a lot of questions to make sure that it's done in the perfectly right way. But if you're able to give them enough reason, they're happy to let you proceed with it. So Dubai is the tip of the spear, like all regulators around the world will eventually come about it. But it's about which regulator is going to be the first one to take a leadership stance. So from that perspective, like digital assets, Dubai, VARA makes complete sense to be the first area that we start our tokenization for like the larger market out there.
Yeah, and I think society in UAE is more about to buy even like property by crypto. I think. Have you analyzed this like audience in this region? Because it's just my thoughts. I don't know.
No, actually, that's great because, like, so one of the things that Dubai has, like, they're trying to attract a lot of crypto native talents as well because that's a push that they're making as a geography, and so they have this thing called a golden visa. And one of the things with the golden visa is that if you buy some property or if you invest in Dubai, then you get the ability to stay in Dubai for a period of time and then run a company and then own some land and then be a resident over there for a longer period of time. So the most critical thing I think that they've done in terms of demonstrating that they are open for business to crypto in general is that you can now pay for like your golden visa with USDC. And then there are properties in Dubai there are tokenization platforms, tokenizing real estate in Dubai where you can buy a fraction of a property with USDC, and that becomes proof for your golden visa application. So there's a lot of like different things where the population in Dubai in general is more digital native. They're more comfortable using crypto in general.
Yeah.
And so from like a retail use case perspective, that's the perfect test ground to see what works, what doesn't work, because these are like digitally forward individuals that can help tell you what's working, what's not working, rather than like taking it out to the world and not knowing whether it's going to work or not.
Yes. You really like read my questions because like the next questions I would like to clarify with you how investors can benefit from RWA tokenization in property, especially those who invest in real estate, as Dubai is one of the most attractive market for real estate investment in terms of ROI.
Mm-hmm.
So how they can benefit.
So I think
you already answered, but can we repeat it clearly?
Yeah, sure. We can do it from an investor's perspective because like a lot of what I do is like looking at it from a retail perspective, but let's look at it from the investor's perspective. And one of the things that by tokenizing real estate, the first element is that, let's take something simple. Like you bring property on chain and then you have a yield on it because there's some rent coming from commercial space. So that's pretty basic. That's one way that investors can just like stream their yield in and out wherever they want to, as opposed to having like heavy back office functions that they have right now. The other more interesting thing that a lot of investors in general and real estate developers specifically are looking at is the ability to use blockchains and tokenization of these RWAs as a means to raise capital for their new development projects as well. So there's one which is doing the same things that they do right now, more efficiently and more cheaply on a blockchain, so you save money. The second one is that you're able to raise more capital from a broader audience across the world in a currency that is easily tradable. And so essentially more innovative ideas can be funded, which otherwise like a bank might think are too risky in the traditional sense, whereas crypto audiences in general slightly more risk prone. So there's just like the way I would just sum it down is like there is a slightly different risk profile to some of the users that people can now access. Similarly, the end goal of all of this for investors is I own a property in Dubai, I own a property in Singapore. I can use a Uniswap style DEX to swap like 20% of my Dubai property for a Singapore property. And now suddenly I've diversified my investment across the world. So that's the end goal, but we're maybe like a few years minimum away from that happening.
Okay, yeah, but it's really cool. I think it's great opportunity for future, and I think it will be real. Yeah, and when we speak about tokenized RWAs, can you name any other real use cases? And it's obviously that's on the underwater is NFTs, and but I don't know like how NFTs can be popular in the next year, or we have more like useful cases in our WAs.
Okay. So if I were to just say it back to basically like what else can we tokenize and what else can happen? Yeah. So in terms of tokenization, like it's a spectrum in general, where on one hand you have like digital fungible Web2 products or financial money. Like let's take US Treasuries, right? For example, these are already fungible in the Web2 world and in the traditional finance world as well. They're tracked, they're digitally owned, they're tracked online. So those are the easiest ones to tokenize, primarily because you're taking the same elements and then you're bringing it on chain, and then you're just saying that instead of this user audience, you have like a global user audience that you can access. On the other end of the spectrum, you have highly illiquid assets that are traditionally very difficult to sell, which cannot be fractionalized, which cannot be fractionally owned in any way, like real estate, which has been around for like 3,500 years as a means of store of value. So then you have real estate on one end, you have paper money that's digitally tracked on the other end, and in between is everything else in the world that you could possibly think of that you can tokenize. But just because you can tokenize something doesn't mean that it should be tokenized. So the way that I would think about it is like, if you're tokenizing and you're trying to get into the RWAs, what are the economies of scale that you can get by tokenizing it? So for example, if I want to tokenize one farm in India, it makes no sense because there's nothing I can do with it. There's no scalability. Versus if I take a farming corporation in the US that's on the NASDAQ listed, and then they say that they're going to tokenize the property that they have and then sell it to the farmers as a cooperative, for example, and be able to do that. Now that suddenly has economies of scale. So it makes sense for them to be able to get into the tokenization space. So there's that element, which is like you can tokenize everything, but you shouldn't tokenize everything. And the second element that you mentioned was about NFTs. So I'm going to remove my RWA hat and then just put on my degen cap over here and basically say that if a token is a representation of a project's values, an NFT is the representation of a community's values. So ideally, we don't have too many new communities coming up in the bear market. So I imagine that maybe NFTs in the way that we saw it previously may not come back exactly that way. But there is always people that want to belong to a community. There's always like an angle that people want to have to be where they can share their thoughts with people that think similarly. So I just feel like NFTs will make a comeback. I don't know if they'll come back exactly the same way that they did before, which was great, but then it lasted for a little while and it went away with the bull market. But now I see NFTs are slightly different because even if you take RWAs in general, right? For the slightly more illiquid assets, if you look at an RWA marketplace, and then if you look at an NFT marketplace, and then you strip away all of the NFT elements of like community, etc., you have a place where you can trade fractions of a collection to an audience that's not exactly liquid, that will have liquidity events maybe once in 30 days or so, and be able to access it in the global audience. So if I strip away all of these other things, I'm just describing to you a real estate marketplace as well. So I feel like NFTs are going to come back and it's going to have like completely different utilities because there is a certain uniqueness that it offers in addition to allowing you to be a part of community. So yeah, NFTs I think can and will make a comeback in some form. We're going to have like soul-bound digital IDs to your wallet addresses, which allow some of these KYC components to pass through without you having to deal with it. So that's one, but then I don't see anyone being able to sell it because it's like tied to your wallet and your identity. But yeah, long story short, I think NFTs can make a comeback. How they're going to do that, I'm still not too sure though.
Yeah, okay. So let's speak about barriers that tokenized RWAs was preventing to accepting this. What challenges has Mantra?
No, I mean, there's a lot of challenges to tokenization. So I'm just trying to figure out where to start from. Because one of the main things I feel is there is a regulation piece. I don't want to talk about that anymore. We all know that.
Let's keep it. I think it's not useful information because regulation is so far. It's just talking and there is no any practical thing.
Correct. So you and I agree on this, that regulation is a big hurdle, but it's not the only hurdle. There's many more hurdles. So we'll talk about the other ones that are actually within our control to solve. So I think one of the main things is like user education. When I say user, it could be an investor, it could be a buyer, it could be a seller, it could be anyone. But the fact that there are still a lot of people out there that will say, oh, is it a Bitcoin? And then I'm like, no, I'm talking about a completely different blockchain, and they don't know the difference. Or sometimes people go like, it's okay. Like there's a lot of people out there in the traditional finance world that think about it in this way. And on the other side, you have some people from institutions that say, I believe in blockchains, but not in crypto. But the main point of a blockchain is transfer of value via a token of some kind. So if you remove the value transfer and you only have a blockchain, which is a database, I have created a very over-engineered Excel sheet. So trying to communicate, like, you need to have composability and you need to have transfer of value and you need to have users that can access it from around the world. That has been a pretty big challenge in a lot of places, just getting them to understand what exactly the industry is before we even get to the part of how we tokenize parts of it. The other element is on the user side of things, where some people in crypto, the moment you mention the word KYC, they just go like, I hate this guy, I don't want to deal with it, data privacy. So that is the on-chain people don't like KYC, and the off-chain people are still not comfortable with getting on-chain. So we're building for a very small, thin Venn diagram of users at the moment. And as we make the user experience, which is another challenge in this entire thing, as we make the user experience better, I feel it'll get to a point wherein the person that's using the technology wouldn't know whether it's a blockchain or whether it's Mantra chain, whether it's Ethereum, whether it's Solana. They will just know that there is a user-facing app that they have. They don't necessarily know how the backend works. Like similarly, like none of us know how, I mean, not in detail at least, what happens when you tap your credit card at a grocery store. You just know that I tapped it and then we agree that if there's money that's been transferred and sometime later I'll get a bill for it. Similarly, we need to get to that level for blockchains as well before we even get to tokenization. Because as a user, if I start to talk about how my database is better than your database and how fast it is, normal users don't really give a shit about it, to be honest. So until we make it such that there's a compelling reason for regular users to come on board and then start tokenizing these assets, and until we give investors and issuers of these tokenized assets and RWAs a legitimate reason to come and build on-chain, that's the acceptance hurdle that we need to overcome. And I think 2025 is going to be a pretty good year to be able to do
that. Yeah, it's like a lot of things you should do.
Sorry.
Yeah, but it's okay. It's just a process. So I read some news. I don't remember who exactly, but some RWA projects announced to integrate RWA into MasterCard, and you mentioned some like card payments. That's why I remember this news. What's Mantra plan? Are there any partnership upcoming or user experience features are coming? Do you have some like plans to grow?
Oh, absolutely. I mean, we've got a pretty stacked roadmap right now that we're building towards. can't necessarily tell you everything because what's the fun in that? You have to like come and like follow us on Twitter and figure out what's going on. But to that end, we've got a lot of use cases that we're working on.
Mm-hmm.
All good. That we're working on at this point in terms of just bringing. There are two elements to it. There is the supply side of inventory, where we have a lot of interesting partnerships that are coming up, and specifically along the lines of bringing Web2 into Web3, along with some of these traditional finance players that we're dealing with as well. And Asia has been pretty progressive in being able to do that. So we've got a lot of interesting partnerships coming up with more asset tokenization firms, as well as a couple of more financial institutions that we're working with. Similarly, a blockchain without a user base is not really a thriving ecosystem. So at the same time, we also have a more use case friendly crypto native product suite that we're building out, not just by ourselves. It's also part of the ecosystem, because this future of RWA is not just us, it needs to be built by a community of people that believe in it. So from that perspective, we have a couple of projects coming on and building soon. We have our RWA accelerator with Google that we announced. So in partnership with a Web2 giant like that, there's credibility in getting like the absolute best
Google
of
Cloud,
Web2 to
yes.
start. Yes, that is correct. So bringing the absolute best and coming into this ecosystem over here. So within that accelerator to grow the ecosystem and the partnerships that we're bringing with the financial institutions, we've got the ingredients for a perfect storm to really get this ecosystem to grow.
Yeah, you already made some noise in the industry. So yeah,
we can always make more noise though,
Yeah,
I think
I
you have to
believe.
make enough. We have to make enough noise that the people not in crypto also start paying attention to us in the right way.
Yeah, that's we need at the moment, because crypto adoption is still happening, but it's not enough. Even that you say there is no even like a structure for crypto education and blockchain education. I think that most people just jump into crypto because it's a type of investments, and maybe some see the technical side, digitalization, but there is no the way how to learn it. Everyone is like Google or have some maybe short courses about something, and that's it.
Yeah, to be honest, I think as an industry, and I'm guilty of this as well, like do your own research has been such a mantra that I've been telling everyone else in the past 10 years I've been here. But then one thing I've realized with do your own research, what that basically means is I'm not here to help you, you go figure it out yourself. So I think as an industry, we need to like move towards being more collaborative and working with each other towards like, it's not me versus you in a blockchain industry context. It's us versus the off-chain world, because there's a better way to do it and it's on-chain. So does it matter how or where we educate users from, as long as more people know about what is the possibility of coming on-chain? So I think that's been a change of mindset for me personally, where I no longer say do your own research. I point them towards what it is and also make them aware of what risks exist, and also tell them how they can mitigate it and work towards it. So it's a slow process, but I think efforts compound over a period of time. So while user adoption has been slow, I think it will grow exponentially over the next couple of years.
Yeah, that's true. I also see this potential. And what's your ambition goal, like for Mantra?
Oh, I mean, to bring the world on chain, to the financial world on chain, because that's the goal. That's what we're working towards. Bring enough users on chain to want to use the products that we have, and bring enough products on chain that users want to use. And that's the goal, to tokenize real estate, tokenize financial markets, tokenize stocks, bonds, equities at some point in time where regulation comes up. So the existing financial system, which is as fragmented and fractured as it is, if we can bring it on chain and have like a global user base, and suddenly we've unlocked the economies of scale that just never would have existed in the traditional way of doing things. So that's my goal, at least, with Mantra.
Yeah, and what trends in crypto and Web3 you are excited the most at the moment?
I think like DeFi is like always there, so I'm not going to say that, and I'm quite deeply involved in it. But I think what really excites me is like decentralized science projects that are coming up, which is like super nerdy of me, because imagine which is because imagine if I could actually, instead of having to go through the academic process of doing all of this paperwork, I was able to put an idea out there and people fund the idea. So that really excites me in terms of like innovative thinking as a human race, species, sorry, which might work out. But otherwise, I think Deepin is also another one that's pretty interesting. We've got a couple of projects working with us that are picking up this decentralized infrastructure networks. So there's Deepin, and in general, I think there's a future for decentralized social media as well, because
there are
more
some
and more people
coming.
There are some out there. It's quite interesting. And then every once in a while, I'll see on Instagram someone saying that, oh, either my account got hacked, or I've been shadow banned, or I don't know why my account is down. There's so many things that are like opaque in that realm, and there's so many users. So I don't know if it's going to be cracked anytime soon, but when it does get cracked, then you've created like the social media content creator economy moves on chain, and then you don't even need to wait for like this middle entity to like decide how much you should get paid for how many ads that were seen. It's all verified on chain. You don't have to worry about it. So yeah, these are a couple of things that I'm quite excited about, and I can see bits and pieces of it playing out in this year and maybe next as well.
Yeah, and you mentioned decentralized funds, and I saw some like big crypto VC invested in these projects, and I like had some thoughts if there is a way then blockchain can be integrated into MadScene. I don't know, but I think maybe it's like the way for future integration. I don't know.
I think it's possible. The thing is like, for the first time, the technology exists, and as a population, we are only limited by our imagination. So if we can imagine it and we can like convince people that something like this should exist, then it exists. Because theoretically, tomorrow morning, I can like, if I had a GD, flip a switch and say that 1 billion users on chain. It's not a technological problem anymore. It's more like a education and awareness problem. So I think it's totally doable in that way, you know?
Yeah. Okay, so what piece of advice you can bring to our audience?
Okay. I would say if you have an idea, just build it. It doesn't need to be perfect. It doesn't need to be great. It doesn't even need to be good. It just needs to be an idea that you build, and either you get a new data point or you have something interesting on your hands. So if you've ever wanted to build in crypto, do it now, because there's never been a better time.
Yeah, appreciate your piece of advice. Thank you for joining. I do like our like chatting today, and please guys, put likes below, comments, any activities. If you have any questions for Jay, please go and answer below in the video. I wish you all the best. I wish you make some noise, as you said, even more, because you deserve it. And yeah, have a great day.
Appreciate you. Thanks so much for having me here today.